You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that rockin' tune means it is time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. 13 great programs to choose from on said network. You can find them pretty much wherever you find your favorite online audio content, including the mothership, theoptionsinsider.com. You can, of course, head on over iTunes, Stitcher, AHA Mobile, wherever you find your favorite shows. You can even pull the RSS feed into whatever program you like. We won't hold it against you. If you want an easy program that has it all built in for you, we made one of those too. It's our mobile app, the Options Insider Radio Network mobile app, available for iOS, Android, and the Fire OS. All 13 plus programs available in there. You can make playlists till your heart's content. And while you're listening, you can even use some of the baked-in functionality there to send questions, comments, insights, acerbic remarks, whatever you choose to do. No shortage of ways for you guys to get your feelings, your ideas, your thoughts, and concerns known to us here on the old Option Block All-Star panel. Going to get into some good ones today. But before we do that, let me introduce the rest of the panel, starting off with the man of many hats, holding down the old Viceroy chair at Options Express by Charles Schwab, none other than Mr. Alex Jacobson. Alex, welcome back to the program, sir.
Mark, good to be here today, and we're going to be talking a lot about oil throughout the show today. That was the dominant theme in the markets today.
Oil seems like pretty much every day in the market these days is oil day, but that'll be some fun stuff to dive into. Oil taking it on the chin yet again today, so we'll dive into that in great detail in a little bit. But first, let me also introduce the man who's been known to mine a few oil fields in his time out there in the great oil flats known as St. Charles, Illinois. You know him, you love him, as Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, glad you can put aside your wildcat hat today and join us on the old program.
You're going to have to excuse me. The rigs are going, so I got stuff to do, guys. Great to be here, as always, and Alex is right. There's definitely a lot going on in the oil world, for sure.
All right, and last, but certainly not least, or perhaps least, depending on your point of view, we won't hold that against you either. Everyone has their favorites, and some may even like Andrew. Of course, the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, beaming in from the great state/principality known as Maine, where apparently his ISP has turned to a French national conglomerate because they are striking over there in Maine. Luckily, he was able to overcome that and join us on the old program today. Mr. Andrew, it seems like pretty much every technological snafu and situation that could conspire to keep you from us has occurred over the past few weeks, but I'm glad you could join us here today.
Yes, I think some are man-made, some are nature-made, and some are just because I hate computers. Other than that, I made it. Somehow I made it. Did I say I dislike computers?
Yeah, I could certainly see where that might have crept in for you over the past few weeks. Our modern marvels bring with them a commensurate amount of difficulty sometimes, and you're certainly getting your lion's share.
Telephone and paper was a good way to trade. we wrecked it. All I'm saying is I'm a dinosaur. I understand I'm a dinosaur, but it was so much easier.
All right, then let's get rolling with the show before the Skype gods boot us off. Let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. If you're just joining us for the first time, first off, welcome. Second, shame on you. We've been here for almost 4 years now, so where have you been? But we're glad you found us nonetheless. This is indeed the portion of the program where we break down what was moving, what was catching our eye, what was lighting up our old tape. And as Alex mentioned, there was a lot of crude and not a heck of a lot of much else, really. All the broad indices pretty much closing, pretty much unched on the day. S&P almost exactly unched on the day. The Dow's up fractionally, the Q's up fractionally, but nothing really too much to write home about. The VIX cash ticking up about 0.75 of a point to 1370, so getting a little bit of life cooking in there. A few deals going on in the M&A side of the space, of course, as well, and that, of course, translating into what's cooking in the oil realm. And Alex, since you brought it up, you get pride of place today. What really caught your eye in today's markets, and give us a little bit of a preview, a sneak preview, if you will, of what was cooking over there at Schwab?
So everything oil related. Crude took out $75 today. And, early in the day, the market was up except for the oils. And the Dow was up big, which meant it was really up big because it's got oils in it. And then at midday, the market just ran out of steam. And the oils actually rallied back a bit, especially like the Schlumbergers and the Exxons and the Conocos. And then the market started to rally again in the afternoon. And then the news hit the wire that Halliburton was in talks to buy Baker Hughes. And the interesting thing then is I sit up on the 11th floor. The trading desk is on the 10th floor, but I sit with a compliance and a product development group. And I actually got the question twice today of, is it time to buy crude? Has crude bottomed here? And we've talked on a couple of previous shows that we saw paper here over the last couple of weeks in both the oils and in the futures with people who were bottom fishing. And clearly they were a bit early, but that was really the dominant story today, was what was going on in the crude market.
Well, since you brought it up, I'm looking here while you're talking at what's going on out here in crude options. And let's just say if any of our listeners are fancying a bit of downside protection, they're going to be paying through the nose for it. We've talked in the past on this program as well as on our Volatility Views program quite a bit about how the skew out there in crude land is looks pretty much like an equity. If you just took the legend off of this graph and just put it out there and said, hey, guess what you're looking at, you would probably guess an equity option because it has a pronounced premium to the puts, and the calls are pretty much nowhere to be found. And that is pretty much yet again the course, and even steeper than recently we've been talking about. Of course, some of the very near-term products that are expiring in only a handful of days look like they're almost a straight up and down chart. Of course, when you look at some of the products that are a little bit farther out, they are also still pronounced and very, very steep. So interesting stuff cooking out there in the land of oil. Andrew, in addition to all your myriad technological woes today, did you have any time to check out oil? And are any of your mentees and chatties over there in the pit chat? Are they diving into USO right now? Or what's been your takeaway from all this tumult out there in crude?
We have looked at it. We had some trades in there. We try to put something together where we, arb XOP volatility because it's relatively a little cheaper, and then try to sell some of the USO vol. But basically trying to make a back spread out of it. I think the weird thing was that OPEC, said they're going to support oil at $70, right? Like 2 weeks ago? And ever since they said that, it's gone straight down. So I don't know if traders are just selling oil till it gets there, but it feels like they put a giant bullseye at that price. So,
and once you say that, what do you expect? That it's going to crush it all the way down till you start catching them.
Historically, when a foreign government says we're going to support this currency till this peg, or we're going to do something till this limit, and things tend to be self-fulfilling like that. I don't know, but I think it very well easily could get down to 70 because. What's driven it from 100 to $75, right? Who the hell knows? Nobody has an idea. Obviously, there's more supply, but nobody really knows, quote unquote. So what's to keep it from touching that number again? I mean, it was trading 80 last week and is trading 74 this week, or touched 74 or 74 and change, right? So I'm a believer in the law of round numbers, and OPEC called that as a number, and they have always had a way of kind of shooting themselves in the foot on the big swing. So except for that brief moment of victory they had in the 70s, ever since then, they have sown the seeds of their own demise by making people go out and actually for oil. So why not 70?
It's funny, we talked about this on our futures options roundtable show a few weeks ago, and it kind of addressed the pronounced skew that was building up even then, which I believe at the time crude was hovering around the low 80s range. And we all said, yeah, it looks like the lion's share of the downside move is kind of spent. There clearly is still market premium in these puts, but people who are gobbling this up expecting a straight move down to the 75 or even below are probably overestimating it. It seemed like the lion's share of the bearish activity had spent itself, and then OPEC comes out and gives out that 70 number. And you're right, just proceeds to shoot themselves in the foot and just gives it a clear path down, certainly to 75 now, and perhaps even far south of that at this point. So, yeah, at this point, it's very much a wait-and-see game out here in crude land. Uncle Mike, take us home, sir. Were you watching the growing turmoil out there in crude? Has it intrigued you at all to perhaps dive into that in any way, shape, or form? And then if not, what else was catching your eye out there in RCM today?
Oh, definitely intrigued by all means. Just towards the end of the day, just all of a sudden you're looking at certain stocks. All of a sudden, Schlumberger, Halliburton, and all of a sudden it just straight up all of a sudden when the news came out that Alex had discussed. So definitely watching it. The thing that actually does surprise me about this move down in crude is that just looking at the absolute non-movement in my beloved metals, not the mini metals, but gold and silver, in that they're relatively unchanged on the day. So I would have thought, even though it's kind of a different event driving down oil, I still would have thought that perhaps gold and silver would have come down with it, but they have not.
Well, speaking of gold, there's all the interesting numbers coming out about gold having some problems finding some love out there in Q3. These are the numbers coming out of the World Gold Council. I'm not that familiar with them, so I'm assuming they're a reputable entity, if not c'est la vie. But I think they have some numbers on gold demand slipping 2% on the year for the July to September period. And their gold demand trends also show that dropping significantly. That compares to 964 tons in the April to June quarter, which is a 16% decline from the year previous. So that's a pretty marked downtrend if you're one of these gold bugs out there like you, Uncle Mike, who's looking for a reason to dive back in. And we've of course speculated on that on this show as well. What was causing some of that perhaps renewed interest in gold? We had seen a similar skew shape to gold in recent weeks, like we're seeing in crude right now, where it was very pronounced to the downside. Then it seemed to soften and lessen and kind of get back to that similar smile shape, showing that there was someone out there who was buying upside, at least from an options perspective, out there in gold land. And we were kind of speculating as to who that might be and why they might be so aggressively bullish. Certainly the macro trend out there not perhaps supporting that. Uncle Mike, does this surprise you at all? Is this pretty much what you expected? That, I mean, especially given what we've seen in the marketplace, that gold demand perhaps a wee bit soft in Q3?
Yeah, I'm actually surprised it wasn't more, to tell you the truth. So just with it, like I've said before, gold's a long-term holding to me, and this is why we hedge things to where when you're totally on the opposite side of where it's going, you have some insurance in place with the put options. But no, it really doesn't surprise. The only thing that would surprise me about it is that it wasn't more with what's going on with it.
I guess if there's one bright spot on the precious metals front, it is India. Their demand jumped 60%. So when everyone else was washing their hands of gold, they were diving in. Still small in the overall picture, 184 tons in Q3, but still a 60% increase is them. Maybe that's them on the upside of the curve. Maybe that's them stabilizing gold volatility skew. We will never know, but an interesting question nonetheless. A lot of our stuff cooking, including, of course, the Buffett deal. He continues to buy the most boring names you could possibly find and stick them into his ever increasingly boring yet ever increasingly profitable portfolio. By the way, I neglected to do so. For those of you playing the home game who get mad at me when I don't mention the date, we are, of course, recording this on Thursday, November 13th. So a lot of interesting stuff to dive into. And I think with that said, we're going to keep on rolling right on into our next very interesting segment. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Welcome to the Odd Block. This is indeed the portion of the program where we break down the weird, wild, wondrous, and sometimes just downright bizarre, ran out of W's there, paper that we're seeing in the old options market. Going to kick things off with a newcomer here. This is Cyberark Software Limited, ticker symbol CYBR, closing today $42.92, up a whopping $9.22, or a little over 27% on the day. So clearly this was a rally ho day here for Cyberark. And of course, as you might expect, the options followed suit. This is the name that does about 500 contracts a day, doing a whopping nearly 9,000 today. So interesting stuff. And we profiled one trade out here today in Cyberark, but it was a pick'em adventure out there in Cyberark today. You pick a strike, you pick a month, and chances are there was some paper lighting it up today. So people were playing all over the place here in Cyberark. What caught our eye early this morning was a small trade. It was 100 lot of the Nove double calls going up for a nickel, paper buying, as the open interest was zero, total of 115 having gone up on the day. So apparently more people piled in after the fact to say, hey, this Nove double strike is where the action is. And you might say to yourself, well, it's 100 lot, who cares? But it's pretty much indicative of just kind of the frenzy that was going on out here in Cyberark today. And I said, you pick a strike, you'll look at the Nove 40s, for example, a few handles south of those Nove doubles, going up 1,500 times today. That's 3x the ADV in this name on one strike. Also saw 1,100 of the Nove 45s, 270 of the Nove 30 puts, which is interesting in and of itself. Those were close to at-the-money puts just this morning. Of course, and you go farther out, DEES 40s trading about 700 times, even the Jan 2015 40s trading about 300 times. So there's paper to choose from across the board. DEES 40 puts also going up a couple hundred times today. Now, far less in the money puts than they were this morning. So it kind of was a pick'em day out here, Andrew. But of course, those Nove doubles certainly perhaps embodying the can-do optimistic spirit of this paper we're seeing out here. Either that or people just frenzied to get in on the Cyberark action. Call it what you will, what you take here on this Cyberark frenzy.
I just, I thought? I said, okay, those calls expire next week, and they are 20% out of the money. So I just said to myself, wow, people are buying some crazy stuff in this name. So one thing you notice is most of the volume today is way more than the open interest on the strike. So there's just a lot of call buyers. And after the $10 rally, maybe they think it's going up another $10, which it could. But I just found that fascinating and amazing that people spend their money on that stuff. Yet they do, which is, of course, why we have the odd block.
That could be a subtitle for this segment of the show. They spend money on that stuff.
I know. I mean, it was still a nickel 100 times. I mean, I know it's not, it's not a ton of money, but, I mean, theoretically speaking, it's got about as much chance of that paying as a lotto ticket, but, well, maybe not that bad. It's still pretty unreasonable, But I just found it a little goofy when I saw that.
Yes, the options equivalent of a scratcher. So we'll see how that pays out as the rest of the week unfolds here. Meanwhile, we're going to move on into, I guess you can call it somewhat similar paper out here in Demand Media. Of course, this is the name that does not a heck of a lot of paper, about 100 some odd contracts a day, doing well beyond that today. So much so, in fact, that my screen here refuses to show me the total volume for whatever reason. It blew their minds. Mr. Rock Lobster, crazy paper going on out here in DMD, including a lot of people looking to have a little bit of love on the upside, perhaps again. Why don't you walk us through what caught your eye out there in good old Demand Media today?
Well, in Demand Media, it started with a 35-cent bid, a 35-cent bid lifting the offer. And after that, the rest, basically the paper went unfilled and it sat on the bid kind of percolating. And then sellers came in, sell as the stock started to pull back a little bit. And eventually the order got filled to the tune of, I guess, a little over 3,000 contracts. And then there might have been some scattered buyers in after that. So somebody thinks this stock is going up. That's what I thought of. I didn't really see any. I didn't see any stock going up. I mean, but you have a $5 stock, and somebody's buying $6 calls. You don't normally see a whole lot of stock going up with something like that, unless it's a buy right. And this was definitely not a buy right, as a standing bid got filled. So, but there was nothing went up marked derivative or anything like that. And somebody wants to own this. Now, of course, was there paper anywhere else? Not really. There's maybe 400 or 500 contracts outside of this order. So, just an opening order. There's no open interest, and they want to have it. So, and this stock has gotten pummeled, by the way. So they just had awful earnings. The stock is down from higher levels. It's just not doing very well by any metric that you can think of. So just split 1 for 5. I don't know what the deal is, but they're having all kinds of issues. So, and maybe somebody thinks those issues are done.
Yeah, so many issues, in fact, that it's completely breaking my quote screen here. It must be this split that is screwing things up, because it is giving me all kinds of quotes and values that do not make a heck of a lot of sense. So I think we'll just move on very quickly from Demand Media. If you're familiar with them, listeners, they do a lot of that stuff where it's kind of the paid content on the online space, a lot of link bait type stuff, and it's not exactly the most reputable business model in the world, and perhaps some of that starting to come home to roost on that name. Meanwhile, we're going to keep on rolling into our final name today. It looks like I can get quotes for this one. This one, not breaking my system. This is Charter Communications, Inc., ticker symbol CHTR. Closing today, 152.73. So this is one of the more premium names we're going to talk about in the odd block for a while. Up about 2.5% or almost $4 on the day. And it looks like in the after hours, they are gapping up perhaps even more. So we'll see how that, we'll stay tuned for that. But in the meantime, what caught our eye was some serious paper going up today. This is the name that does about 600 contracts a day, doing a whopping 15,000 today. So lighting it up from an overall options perspective. And the bulk of that volume came in one interesting, pretty tight 1x2. It was the Dees 155, 160 call 1x2, going up essentially 3,500 by 7,000 times, buying the 155, obviously selling 2 of the 160s. And because it's so tight, they got it off for a nearly 50-cent credit on this trade. So not a bad little credit to put on a 1x2 here to the upside. Looks like perhaps later on in the day, a 2,000 lot of the Dees 170s went up as well. Also, the Dees 150 puts. So perhaps they're hedging that with a strangle. That looks like that could be closing though too, because if you look at both of those strikes, there's about 2,500 on both of those strikes. So it looks like that could be perhaps someone unwinding a strangle they put off before. We didn't have that in our write-up. Looks like it could be just unrelated size paper. Though with so much going on out here in CHTR, it's kind of hard to believe that it is completely unrelated. Either way, some interesting stuff really going on up here. Just looking at the 1x2 by itself, it's a lot tighter than these 1x2s we usually see. We usually see them spread out a little bit. This guy obviously trying to capture as much of a credit as he can, believing Charter is going to be moving on up north to around the 160 level, but not a heck of a lot beyond that, hence his willingness to dump an extra call on that strike. Mr. Rock Lobster, what's your take here on this trade, as well as perhaps this unwinding of what could be a strangle or perhaps a risk reversal on the outskirts of Charter here?
Yeah, the risk reversal, that didn't kind of factor in when I was writing this up at the time. But the 1x2 I thought was interesting because it's relatively aggressive for as close as it is. You're only 1% of the stock is $1.50, and you're already at kind of the long strike, or the 155. So it's a pretty aggressive play, I think. Your stock's up 4%, and you're kind of at the top of the range already. So whoever put this trade on is not looking for a whole lot of movement, and I just like, wow. I guess because the stock had just fallen off the cliff, sort of, they're playing like a bounce back to 160, sort of some sort of textbook bounce to get back to that high. So I can see the rationale for it, but and it looks like kind of 165 feels like the top of the range for the year for the name. So it looks like they looked at a chart and said, okay, this is where it's going to go, and it ain't going past this, and I'm putting this trade on. So that's kind of what it feels like. And if it doesn't make it, they'll take their 47-cent credit and go on. So still, let's just say it's not a trade without risk, at least from that point of view. But the stock does have to do an awful lot to make it hurt.
Yeah, you're right. It is a lot tighter than a typical risk 1x2 that we see going up. And you're right, it doesn't take much, particularly for a stock this pricey, to blow through those strikes pretty easily. And then this guy may be regretting his willingness to blast away on the 160 strike. But if it moves up ever so sudden, or shortly, I should say, to that 160 strike and doesn't go beyond it, he might be all right. I'm looking here more again at this 2,000 lot that went up as well. It looks like on the surface, paper was sell and call and buy and put. So perhaps unwinding what essentially had been a bullish risk reversal on there, which if that was the case, then it did all right. Of course, he's a little bit out of the money there, but still, an interesting play nonetheless. Perhaps related, perhaps not. Either way, a lot of paper, a lot of size paper going up out here in good old Charter Communications. We'll leave it to you guys, the listener, to make the end determination on what you think of all this paper out here in Charter. Is it savvy? Is it not? Would you put on a 1x2 as tight as this guy? Maybe you like a little bit more room to run. What do you think about this risk reversal? All kinds of things for you guys to weigh in on. Let us know. We love to hear from you guys. Meanwhile, we're going to keep on rolling right on into the Viceroy block. It's time once again for the Express block.
The Express block. Brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody. Welcome to the Express Block. This is indeed the portion of the program where we dive into what's cooking, what's moving, what's shaking over there on the Options Express by Charles Schwab platform. And to do that, we have none other than our own favorite, the Viceroy, Mr. Alex Jacobson. Alex, you said at the top of the show it was kind of all crude all day long. So give us a little bit more insight into that and perhaps what else was cooking over there in the land of OX by Charles Schwab.
So as both Mike and I have talked about, you came in this morning, market was up big, and everything oil related. Mike mentioned, I think Schlumberger was down 3, Exxon was down, ConocoPhillips. Just everything oil related was getting slammed. Crude had taken out $75. And then this afternoon, the story hit that Halliburton might be making a run at Baker Hughes. And I'm old enough to remember when those were two separate companies, Hughes Tool and Baker. And that seemed to be a catalyst. And I think it was a catalyst in two ways. I think, number one, people have been looking for that bottom in crude. And as you mentioned from the Valve View show, crude seemed to be pretty well thought out in terms of volatility and, not going to take out $75. And it did exactly that, which proves and kind of humbles all of us. But crude's a longer conversation we should have one day about how it trades and how difficult it is to trade spot. There were a couple other themes today, and John Grigas, who runs our trading desk, and I were both kind of in meetings. In fact, I had an impromptu meeting just now up here during the odd block. That's how busy a day it's been. But a couple of themes today. Both Amazon and Apple, both clearly momentum stocks, hit near-term highs. Now, I know it's not the high for Amazon, but Amazon took out the 315 level, and it wasn't, I think, 3 weeks ago that it was 280. So Amazon is up about 10% off its near-term low. And Apple, there seems to be, at least in the order flow we're seeing here, there seems to be what I'm going to call capitulation, but that's kind of the wrong term. It seems to be that investors now are just buying out of the money premium in Apple with the expectation that it's going to a much higher number. So our hardcore premium sellers are selling out of the money puts in it, but we're getting that spec premium buyer back into it now. And it was a topic on OX Social today. I want to touch two other comments. The Chinese twins, Baba and Baidu, say that 3 times fast. Both got hit pretty hard today. And one other comment I want to make. A couple months back, I started to talk about how the perception of risk and risk-based margin and portfolio margin was being adjusted on the street. And of course, anytime I say that, I get the emails, the conspiracy theorists that say, okay, the market's going down, it. You're wired into the folks who make it go down. Of course, there are no folks who make it go down, but that'll get me emails too. Portfolio margining, risk-based margining is starting to go up on the street, and it's going up here, and it will be going up everywhere. And I don't want to frame it as a reevaluation of risk-based margining, but it's clear that some of those levels just don't fit in today's market. And it isn't just the volatility, it's the thinness markets. The fact that you just don't have the same dealer community, the same specialist community, the same amount of capital willing to take risks. I think we saw that a lot a few weeks back when the market really got hit hard and then immediately came back. In my view, some of that is thin markets and how the market making and specialist community has changed, how high frequency trading has impacted them and sent them, some of them, to the sidelines. So again, just be aware, if you're running an account, if you're a premium seller or you've got big concentrated positions and you're running close to zero available margin, zero SMA, I'm not forecasting the market's going to do anything, but you're going to need to raise some cash here because the brokerage industry's perception of risk, it's finally filtering in what we were talking about a couple months back. So I sounded like I'm preaching, but that's what's going on here at OX.
A lot of stuff to sink our teeth into. Thank you for that, Alex. Hey, Alex, really quickly refresh my memory. I know you guys run the Idea Hub off of pretty much a variety of different VIX indicators for single names, but there is, of course, the oil VIX as well. So does that mean you're generating premium harvesting and recommendation ideas in the Idea Hub for, at the very least, USO as well, and that could be like your crude proxy, or are you guys not doing that?
No, we do it on the future side for the light crude contract. Okay. So we translated the challenge with the oil ETFs is, and I think we're kind of all on the same page with this.
That they suck.
They're really not. Yeah. Yeah. See, I'm not allowed to say that.
I will put the words in your mouth for you, sir.
Let's just say they're not good proxies. So we avoided that as best as we could. I think it's better if you're going to trade crude and you are futures eligible, I would trade the options on the light crude contract. They're pure proxy and they're much more liquid.
I think we can all get behind that, sir. I just wanted to check for our listeners who are out there looking at the Idea Hub, thinking about, hey, does it have any cool ideas for crude? It certainly does. So, all right, and surf on over to optionsexpress.com if you'd like to learn more about any of those tools or features that Alex was talking about. While you're there, hey, tell them the Option Block sent you. I'm sure they'll love to hear it. Meanwhile, we're going to keep on rolling. It is Thursday. That means it's time for you guys to take your front and center seat here on the old program as we open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys get to join us here on the old program, on the old All-Star panel. No shortage of ways for you guys to do just that. Tweet at us at Options over there on Twitter, The Options Insider on Facebook. Questions at theoptionsinsider.com. Find us on StockTwits. We're The Options Insider, actually at Options Insider on StockTwits. So no shortage of ways for you guys to find us. Of course, a lot of you guys also like to use the website comments and the website feedback form available at theoptionsinsider.com as well. No shortage of ways for you guys to reach out, just like our first friend did here, Mr. DJSpin, asking a question that's on a lot of people's minds right now. Uncle Mike, this one's right up your alley, so put your listening ears on. He asked, what's your best play for a Santa Claus rally here in SPY? Well, we already have had quite a rally in SPY already, so I'm not sure how much more we're destined for, but if you do indeed subscribe to what our friend Mr. DJSpin here is selling, that we do have more upside to come, and I think Uncle Mike certainly falls into that bandwagon. Uncle Mike, what do you have to say here for our friend Mr. DJSpin, looking for some trades to pick up some upside here in SPY?
Oh, that's a fun idea, I think. Merry Christmas. You know, I've never met a bullish trade that I didn't like initially, so the way with which I'm doing it right now might be of interest to you for what you could do for the Santa Claus rally. I'm out in February right now for my long calls, but you may want to even do this for January if you're trying to be a little bit more specific for the month of January. I have no problem buying slightly in the money or at the money premium right now, just because it's my opinion that volatility is relatively low. And by relative, I mean it's, I guess, I don't really see a major vol spike coming, and if it does start to come, then I think we should just pull the plug, because if the VIX goes back to 30, then you should be out of the trade long before then anyway, in my opinion. So step one, I would buy maybe like a 200, 198 call option, something along those lines, and that would be with approximately half the capital that you want to dedicate to this trade. And then with the other half of it, approximately, leave some room to make sure that all this would work, I would wait for a pullback in some way, shape, or form. And if we get a little bit of a pullback, then I would sell a put spread on a weekly. And then if we do continue to go higher, then I would look to potentially either sell some call spreads, some vertical call spreads, a long call, or perhaps buy a horizontal put spread, meaning some type of a calendar, as a means of maybe protecting profits in one way, shape, or form. So in other words, if it goes up, take a little bit of your deltas off the table as it goes higher. Now, if it gets to the point with which you believe it's going to go, let's say SPY up to 207 is your Santa Claus rally. Well, as soon as it gets there, then I would just simply exit the call position. But if you're planning on it going a little bit higher than that, you may want to consider some of the things with which I just mentioned.
What, Uncle Mike? No crazy tight 1x2s like we saw in the odd block or any of these other fun strategies that our listeners can get into a lot of trouble with?
What the heck? Let's do a Christmas tree spread.
There we go. Let's do it. Let's do 204, 205, 1x8. I like that. Let's go that way. No possible problems can emerge from that one. Great question here, Mr. DJ.
It's a credit. What could possibly go wrong?
You're collecting money. There is no risk. You're just getting paid money. Therefore, all is right with that trade. Let's move on quickly before we get Alex in trouble and move on to another question here. This one comes from Mr. or Mrs. Eliac. Hope I'm pronouncing that right. Interesting question. It reveals an interesting thought process perhaps behind it that might be worthy to explore here on the show and perhaps debunk a bit. This question is, which out-of-the-money call strike performs the best when the underlying rallies? It's an interesting question, actually. And it actually sounds kind of familiar. I remember hearing something not that long ago, someone else asking a similar question on another outlet we do, and I had never thought of it in those terms before, but apparently this is a popular question floating around out there in the retail space. There's this perception that there's some magic number, there's some magic strike, 3% out of the money, 5%, 10%, whatever, pick your poison. And that is the spot you have to play from an upside options perspective, because that gives you the most bang for your buck. Unfortunately, Mr. or Mrs. Eliac, I hate to burst your bubble a little bit, but there really isn't any magic number, any magic strike. If you remember what we were talking about earlier in this show, and we've talked about many times on this program, that concept of volatility skew, that's really going to play into where you want to play on this strike change. And that's going to, unfortunately, vary on a product-by-product basis, as well as on an expiration month basis within the individual products, and it's going to change on a regular basis depending on the paper flow you have going on out there in these products. So to say that there's some hard and fast rule for you got to be 5% out of the money on these calls, that's really where the most bang for your buck is. It just doesn't work that way. If the calls are ridiculously flat to the upside in a particular name, which you're going to get in a lot of broad indexes as well as a lot of heavily traded equities, that's going to very much impact the performance of those calls as the underlying rallies, versus maybe you have some of the names you talk about in the odd block, for example, the biotechs and others that have very steep upside call skews because there's a lot of speculative activity on those strikes. So they're going to be more expensive, and they're going to have a different performance characteristic than some of the other names we talk about. So it really breaks down on a product-by-product basis, then a month-by-month basis, and even once you start getting into that, what's going on in the paper flow on any individual product that can really determine where you want to play on a particular strike. So yeah, I'm sorry. I hate to dissuade you of this notion because it's romantic and it's idealistic that there is this perfect way to play options. But unfortunately, that simply is not the case. Anyone else want to dive in here on our debunking options myths block here?
The only thing I would say is if you're buying out of the money calls, give yourself enough time. I mean, if you're going to do it, I have seen clients do it and make gigantic money, but they have all let time be their friend and not their enemy. So, if you buy short-term options, something has to happen so fast to keep up with the decay that you have to have a crystal ball. So a little long term, let time work for you a little more. And that's, at least you're giving yourself a better shot. That is what I would say.
Got to spend a little more money to make some money at the end of the day. All right. Unfortunately, that's all the time we have for the mail block this week, but keep those questions coming. We love them, all shapes and sizes, some very high end, some very basic. We love them all. Send them all in. We love to hear from you guys. Meanwhile, we're going to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is where we tell you what we're watching, what we're keeping an eye on for the rest of this week going into the old weekend. Unlike other recent weeks, not a heck of a lot from a broad macro perspective that a lot of people are really keeping an eye on. Not a lot of numbers coming out to keep an eye on. But still, there are a few things worthy of note, and we shall get into those. Perhaps starting with you, Mr. Viceroy. What is catching your eye and your attention as we go into the weekend?
Well, two macro issues, crude and the 10-year. I think the 10-year here in the 230s, in the mid-230s, continues to bode well for the market. Andrew's analysis of OPEC trying to hold $70, I think that's going to be a real critical psychological issue. And I think if crude can't hold $70, I'm not sure what the next stop is. I think it's closer to a bottom, but if it can't hold 70, I think that's going to be a real issue. I think volatility is going to continue to decline, and I think we're looking at a good rest of the year for the market.
Uncle Mike, I will toss it to you next, sir. What are you keeping an eye on in addition to all your doing stuff out there in Spyland?
Well, with that, just still watching to see if we can continue to make new all-time highs in SPY, especially tomorrow on a Friday. Looking at Apple, continuing to make new all-time highs. It's definitely exciting to continue to view the fruit company these days, that's for sure. One thing with Apple, it'll be interesting to see going into the Christmas season if they can continue to build on or continue to work with the momentum with which they have had with the rallying, just because of the fact that the darn thing's gone up so much. And if Christmas can have it go higher, then it'll be a fun Christmas for a lot of the people that we know that are in Apple.
There we go. That would be your Santa Claus rally, sir.
Ho, ho, ho.
All right. And last but not least, take us home, Mr. Rock Lobster. What are you keeping an eye on for the rest of the week into the old weekend?
Besides the negotiations by the union for my ISP that I have here in Maine.
Are you going to be the arbiter of these big negotiations with the French conglomerate running your ISP?
I guess so. The same thing with oil. I would think that cheaper oil prices pays a pretty big dividend to the U.S., and I think that's been part of what's having this. That's part of what made the market bounce, and that's part of what made this rally happen. The only reticence, I think, might be, oil production now is a pretty big part of the domestic economy. I mean, it's always been a good chunk, but, in the last 4 or 5 years with the shale boom and fracking and everything, it's a much bigger part. So obviously you want to keep those people employed as well. Probably a lot of them are still profitable around $70, but like I said, some bigwig somewhere puts a bullseye that big of a number, and I feel like there's a tendency to go to it. Not that we might go through it or anything, but still the drop from 100 to 75 has been sort of what we call a scary quiet drop. There hasn't really been a reason, so everybody has to speculate on the reason. I don't know if I would be just flat out wanting to short oil, but I believe anyway that it could make a little bit lower of a number. Overall, that should be good, but at the end of the day here, we had a pretty good bid in volatility going into the weekend. Maybe it's the Russians in Ukraine, who knows? 4 months ago, that popped the volatility 8 points in a day or 6 points in a day. today the VIX only gets bid up about 55 or 60 cents or whatever we closed at. So, I think if anything it actually was up 70 cents today, 77 cents. So I think that's enough to put a little worry in the rally. And normally I like my rallies and my volatility to drop at the same time. So it's just a little pause. I lost some stock today from overriding, and I'm okay with that. So if it's all kind of clear, I'll go start selling some more puts again. But if not, we'll see what happens. I might go on the two-saw train and start selling some out of the money, put spreads in the SPY.
So wait a minute, you got stock called away and you're not freaking out? What's wrong with you, sir? I still don't get
out. I realized
how many of our listeners get so freaked out by that concept. Maybe if we can do nothing else on the show, if we can just train them that isn't the scariest end outcome, that actually is not a bad thing. We've done our duty here.
Nothing happened.
You're not dead. Maybe that's why the French. That's why the French are picketing you, sir. Is because your stock got called away. All right. Before we offend any more Frenchmen, I think we'll wrap up the old Around the Block segment as well as this episode of the Option Block. But before we go, as always, let's check in with each of our cohorts here on the old All-Star panel. See what they have cooking that may interest you. Alex, I know you guys over there at OX by Charles Schwab had a big day-long event with the mothership going on actually right now today on November 13th. Give us a quick overview of that in case our listeners want to check out the archives, as well as what else you guys have coming down the pike over there in the land of OX by Charles Schwab.
Yeah, today's live event was interesting in many ways, but a lot of conversation about year-end taxes, how to manage this rally. Bill Griffith, an old friend of mine back from FNN days, obviously now the lead anchor on CNBC, was the keynote. And they had virtual events are really becoming the way to do things here because of the scale. But great event. I watched bits and pieces of it today when I could. But speaking of events, our next three live events, Jimmy Rouzan and his crew, this Saturday, November 15th in Raleigh, Saturday after, November 22nd in Houston, and a December 13th event. Always wonder why Jimmy's in Florida in December and January. But December 13th in Boca Raton. These are the team's about 3/4 of a day event. They're free. You can come to the site, optionsexpress.com. If you can't attend the live event, you can attend it virtually on the site. Nina has a couple events coming up. On Thursday of next week, the 20th, Nina's going to do advanced order features and the walk limit. And on Wednesday, the 19th, speaking of crude futures, Mike Zaremski, who heads our futures desk, is going to do a futures orientation for new Options Express customers. And if you're thinking about maybe wanting to trade some crude options and you've never traded futures before, come in on Wednesday, listen to Mike, ask him questions. All the events are free. Just come to optionsexpress.com, and all the education events are ahead of the login.
Gotta love that. And speaking of education, Mr. Rock Lobster, what do you guys have cooking over there in the land of the pit?
Oh, well, just the normal boot camp. Middle of December, right around the week of, it's actually got the exact date here. It's the 10th, 11th, and 13th. We're boot camping 6 hours, understanding volatility, understanding delta neutral trading, selling calls against stock, the wheel, selling puts, trying to manage the risk of all those, trying to have a balanced book. All the stuff we talk about in the show, we will talk about in, I would say, fairly decent detail for a 6-hour course, but you will be a lot more comfortable with all of those things, because the whole idea of what we think about at Option Pit is, as long as you know how things are going to work out before you enter them, you at least have a shot of trying to make money on the trade. So the first thing you do is educate yourself, and that is what we have the boot camps for.
Well said, sir. And last but not least, take us home, Uncle Mike. What's coming down the pike in the land of RCM Wealth Advisors?
Well, a couple things. The December 10th event in Miami. For more information on that, go to www.rcmfutures.com. I don't get to go to Miami in December, so maybe I need to hook up with Jim Rouzan with the crew at OX. I don't know. And then, once again, I am running my advanced marketing slogan here, my chat before you get fat promotion. Most people do not like to discuss finances in the holiday season. We're getting closer, folks, so give me a call. Even if you have just say $500 a month to invest, would love to chat with you. 312-212-3531 or send me an email at mtusaw@rcmam.com.
Well said, sir. And for all of you out there, of course, on behalf of Uncle Mike and the Viceroy and the Rock Lobster and myself, I want to thank each and every one of you for downloading and streaming and subscribing to the show, and for downloading the mobile app to listen, and of course, for sending in such great questions. We'll get to more of them next week, and we'll see you next week right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.